I'd like to thank Teleflex, who are our sponsors for this session. They're fantastic partners with CODA, and they're passionate about the cause of sustainable healthcare and as part of their corporate and social responsibility. And it's not surprising, given that their mission is to improve the quality and health of people's lives.
Thanks so much, Roger and Ollie. So for those of us who work in climate and health, the one question that we get most commonly by far from health workers is, okay, what can I do? Okay. And there are two sort of probably main areas that you can work in. Firstly, you can reduce your own personal carbon footprint. And secondly, you can use your influence as a health worker to reduce the health sector's carbon footprint. And whilst keep cups are really nice, there are other ways that you can have even more impact, such as in energy. So today we have a stellar lineup of speakers who are experts in these areas, in energy finance, in corporate and social responsibility, and in net zero healthcare, to inform and to inspire you to use your money and to use your influence to shift away from fossil fuels and towards clean and healthy and safe forms of energy. So Tim will be speaking first. Over to you, Tim.
Good morning all, and thank you, Kate, for that very nice welcome. Could I start by paying my respects to the traditional owners, past, present and emerging. Just 1 year ago, when I talked to my scientific friends, they told me, thank you, that it was probably too late, that it was impossible to stop runaway climate change. And they constantly said I was way too excited, too bullish, and that it was critical we adapt, and that there was just a looming global crisis before us. Now, we still have a looming global crisis, but 1 year later, I think COVID changed everything. And it changed everything in a number of ways. Firstly, demand, rather than growing for energy, demand actually declined globally last year, unprecedented. Secondly, we saw that in order to deal with COVID, you actually had to accept the scientific evidence. You had to act, firstly accept the science, and then secondly act on it, and you had to act globally. Thirdly, we saw a trade war emerge conveniently at the same time between Saudi Arabia, Russia and America on oil. And that collapsed the price of oil and hence LNG, liquid natural gas. That then prompted a 60% decline in the leading oil companies of the world. And so the final transformation that happened, in my view, was that finance, which is my background, accepted that stranded asset risk, the risks to wealth of climate change, were a very real and present danger. They're a wealth hazard. And a 60% collapse in the price of Exxon is a very good reminder to financial leaders that if they don't act on the science, if they don't act on the risks, the financial risks, they lose a lot of money and they lose it very quickly. And so a year later, I'm actually more bullish than I've ever been before. And I think the prospect of the world actually delivering on the Paris Climate Agreement is a very real prospect. But as we just heard, it's critical that we all work together and that the voice of the medical and health community come together to reinforce it, because you are a respected voice, and at the moment Australia is a clear global laggard in terms of policy, and it's critical that we are a lifter, not a leaner. And I would argue that Australia under Scott Morrison's government is an absolute leaner. Now, as Kate mentioned, I actually work on South Asia. I work on India as my primary market, and that is because under Prime Minister Modi, India is an absolute lifter, not a leaner. India is going to do its unfair share to change and deliver on the Paris Climate Agreement. And you might be aware that the Paris Agreement is predicated on the common but differentiated responsibilities. India, like the developing world, didn't cause the problem. We did, the OECD, the developed countries did. But India is very happy to actually deliver on the solution. And under Prime Minister Modi, they are actually working rapidly in that area. And so I actually have started 2021 exceptionally bullish, as hopefully in the next 10 minutes you'll get a flavour for why. Firstly, and the slides are available if you want, don't worry about too much of the detail, they're more a prompt for me. A theme that I've been talking about for 8 years at IEFA is the ongoing technology development that is coming at breakneck speed, and deflation, an economic term, prices going down every year, is an absolute categoric critical issue that is allowing us to be optimistic, and why finance is actually pivoting. So the price of wind has dropped by 50% in the last decade. The price of solar has dropped 90%. The price of batteries have dropped 90%. And so we've seen massive ongoing technology disruption in the energy markets, and we've gone through a first tipping point, meaning renewable energy is now at grid parity with traditional fossil fuels, and India has actually gone through a second tipping point in December where they saw the price of solar drop by 15% in just 6 months. It is now, solar can be built today in India below the marginal fuel cost of running a coal-fired power plant that's already in existence. And so rather than paying for the coal and paying for the workers and depreciating a coal plant, you can build a new solar project and you'll actually be better off economically. That's a dramatic second tipping point, and I think India leads the world in that, and the rest of the world will follow. But the other thing that gives me enormous confidence and hope is that we are finally, belatedly, seeing governments around the world really embracing it. We've seen 5 years of inaction post-Paris, but I think everything changed when President Xi of China pledged peak emissions by 2030 and net zero as an ambition by 2060 in China. Now that is decades ahead of what China was on track to deliver, and it's decades ahead of what the world thought China would be able to do. So that does change everything. Now that was then compounded when Japan, under President Suga, came out with, it was actually, the legwork was put in place by President Abe the Prime Minister Abe of Japan for 2 years. He built a Japanese consensus that climate change was a critical pressing issue and that Japan had to do their fair share of the work. And so under the new leadership, President Suga has come out with a net zero emissions pledge. 2 days later, South Korea came out with the same pledge by President Moon Jae-in. Now, why are China, Japan and Korea so critical to us? Because they're our largest 3 trade partners in fossil fuels. Japan is our largest buyer of coal, coking coal, thermal coal and LNG. Korea is our second largest thermal coal, coking coal and LNG customer. China, the third. And so all of our trading partners are moving dramatically, and so it's beholden on us to respond to that, because it's going to happen regardless of what we do. And that's where Scott Morrison is fundamentally totally wrong. He goes, he's not going to be dictated to by other governments. Well, financial markets and economics says he will be, because the customer's always right. The customer's going to change dramatically, and we will just, as a supplier, either get left behind or we pivot with them. Now, we started this year, thank God, with a major transformation in America. America went from being a bigger world laggard on climate change than Australia to actually now being a world leader under President Biden. Now, I'm pretty optimistic, but you only have to read his executive order, which is an excerpt just from the top of the executive order he put out 2 weeks ago, talking about how he was going to make climate change the fundamental issue that he's going to drive for the next 4 years. And they're pretty dramatic changes, what he's already proposing. We've been haggling over a price on carbon for a decade. We had one for 2 years, we're a world leader, and then we threw it out. We decided to take a decade or 2 backward step. President Biden has just put in a social cost of carbon into every decision that the government of America will make from now on. So he doesn't have to wait about legislation. He doesn't have to bring a market price on carbon. He's just said it will be incorporated at $50 US a tonne on every decision the government makes in America from now on. And he's also said he will remove every fossil fuel subsidy with immediate effect. And that's something the International Energy Agency has been calling for decades. Another fundamental change, now a year ago in finance, sorry, I'll step back. Mark Carney, this is a picture of Mark Carney. He made a transformational speech. Mark Carney was the governor of the Bank of England. He was the chair of the Financial Stability Board globally. And 6 years ago, he gave a transformational speech talking about the tragedy of the horizon for the financial markets. And the Bank of England took a global leadership role. They talked about $20 trillion of assets at risk and how financially we had to deal with this problem. Put aside all the health issues, all the economic issues, just from a financial perspective, the financial system was vulnerable if we don't deal with it. Now, for 3 or 4 years, people generally ignored him. Fortunately, APRA, Jeff Summer-Hayes, didn't. He's enacted that legislation, that intent in the Australian regulatory environment in finance. And I think everything changed in January 2020 when Larry Fink gave what I think is a profound change of heart at BlackRock, or change of position. Heart's probably the wrong word, and Dan's probably being sick as I say this. But I think fundamentally, Larry Fink, the CEO, the founder of BlackRock, which is the biggest company in the world, is the biggest financial institution in the world. It manages $8 trillion, so it's bigger than almost every country in the world. And Larry Fink said climate change was real, it was a key financial risk, and put aside morality, he had a financial requirement that he had to deal with it. Now, he followed that up with a speech 2 weeks ago, his letter to every CEO of every company in the world, saying 2 weeks ago, 95% of the speech was about climate change. You had no choice. If you want to have BlackRock as a shareholder, as a debt investor, as a partner, as a financial partner, you actually have to comply with what BlackRock requires, which is embracing the Paris Climate Agreement, embracing the opportunities, and dealing with the financial risks of climate change. So Larry Fink uses the word, there is a tectonic shift that is accelerating, key words. At the end of the day, there's nothing more that motivates a person in finance than money. And the money is moving really, really rapidly. And we just saw this week actually, Morningstar put out the fourth quarter data. In ESG funds or sustainability fund flow globally is dramatically accelerating. So in 2014, 1% of global fund flow went into environmental, social and governance mandates. In 2020, 25% of global funds went into ESG-aligned mandates. What's the number one ESG issue? Climate risk, climate change. Money changes everything. So we're seeing a series of financial institutions around the world putting in formal policies saying they won't invest in coal. In the last 12 months, we've noticed that the shift in the language and the policies, the formal policies, saying they now have to manage the key financial risk of climate change, and they actually have to reduce their entire fossil fuel exposure progressively, and go for net zero. October last year, we saw two very interesting announcements, one from Macquarie Group, one from the New York State Pension, which said they required net zero emissions targets by 2040, not 2050. So you'll hear a lot about net zero emissions by 2050. That's what I was going to say all countries are pledging towards, except for Australia. We, of course, are leaners, not lifters. So we haven't pledged to net zero by 2050. But the reality is India has till 2050 or 2060 to deal with Paris. The OECD has 2040, and that's why Macquarie Group is a leader. They see the money, they see the opportunity to make a huge amount of money for their investors and themselves, and they're put on a 2040 target. So self-interest, great motivator. Global leaders are actually moving really rapidly. In the last 2 minutes, insurance, and Dan will probably touch on this, but reinsurance has gone from being almost totally climate agnostic. Now, you'd think insurers would really understand climate risk, but they, up until recently, haven't factored it in. But now 48% of the world's reinsurers have coal policy exclusions. That's a dramatic shift in 3 years. Don't worry about the detail. The green is my favourite company in the world, NextEra Energy. It's the biggest investor in renewables in the world. For 15 years, NextEra Energy has been the best performing, or one of the best performing utilities in the world. So there's no coincidence that the biggest investor in renewable energy in the world, bigger than even China, is NextEra Energy of America, and it's one of the best performing stocks in the world in 15 years. And it accelerated last year. It's up 600%. But Senator Canavan thinks we should go with coal. Black is Peabody Energy. That was one of the world's biggest coal companies on its way to bankruptcy. Red is Exxon, the world's largest oil and gas company. It was the world's largest company 20 years ago. Exxon was a $500 billion giant. Today it's a minnow. LNG, absolutely no different. Gas, fossil gas. The idea that our government promotes a gas-led recovery is ridiculous. Let's produce more fossil fuels as we go to zero fossil fuels. Let's go in the absolute wrong direction. It's 5% better than the alternative of coal. We need 100% better. Australia needs to be a leader, not a laggard. The idea that gas is better than coal on an emissions prospect, at the plant face, coal is worse than gas. It's double what gas is. But as soon as you actually look at the supply chain for gas is horrific. And so anyone who tells you gas is a transition fuel is reading the fossil fuel transcript from a decade ago. It's just factually wrong. And finally, our government's been telling us that renewable energy, you can't run a grid on renewable energy. Well, and it's also really expensive. So final point, 2020, renewable energy, 59% of all electricity in South Australia, and better still, the price of electricity in South Australia was down 50% last year versus the previous 3-year average. Why? It's got one of the best renewable energy install rates in the world, and renewables can power the grid, they will power the grid. You can do it cheaper, you can do it cleaner and more sustainably. Thank you.
Terrific, thanks so much, Tim. One of my questions for Tim was, well, how fast is the money moving? But I think you've already answered that, so we won't go there. Yeah, thank you. It's so nice to hear such hope and optimism, actually, because for those of us who've been in this for a decade, it's been a tough ride so far. So I'll go to all the panel for their reflections on Tim's comments. I might go to Courtney and then to Nick to bring them into the conversation. So Courtney, your reflections on that from a Canadian perspective, Nick from the UK. And Nick in particular, I guess we're interested in what the role of healthcare can be in accelerating this transition and helping out and pushing things along. Nick, I know that the NHS, for instance, has reduced its carbon footprint a lot in the last decade. Some of that has been from grid decarbonisation, and I know, the particular push from health professionals against fossil fuels and pushing for clean air and that work. So I wonder if you'd like to comment on that. But I'll go to Courtney first.
Sure, thanks. And the money is so interesting because that plays a lot into these quests that many medical associations have right now to get their organizations to divest from fossil fuels. So I first asked the Canadian Medical Association to divest from fossil fuels about in 2013, 2014. And I sat down with one of the VPs of management of MB Financial, who is their financial company, and I showed him the website that was associated with the London School of Economics that talked for the first time about stranded assets, and he was completely naive to the issue. He looked at it and he's like, "Are these guys legit? Are these guys legit?" And I said, "Well, do you think the London School of Economics is legit?" And he said yes. And that was the start of productive conversations at the Canadian Medical Association about divesting from fossil fuels. And so after about 2 years of effort, we did vote to divest. And then we, in fact, sold MB Financial, which was an investment vehicle for Canadian doctors, for $2.6 billion. And when we then had to go see whether or not we should divest that additional set of funds, we did. And there was no longer a financial argument to be made that it wasn't in keeping with fiduciary responsibility to do so. So things have changed a lot.
Thanks, Courtney. Nick?
Yeah, you can hear me. I don't even have to ask if you can understand me. This is the first time I don't even have to talk about my accent. Our role in accelerating this work as health professionals, I mean, it's very, very clear, right? The best example I saw of this was a GP, Helen Stokes-Lampard. She was the president of the Royal College of General Practitioners at the time. There was a big debate going on in the United Kingdom about the phase out of coal. She went on something called the Today program, big program here in the UK. And she was saying, listen, I think as a GP, this is something that's important. This is a positive step for the nation's health. And she got a lot of pushback from the hosts, because that's what, sometimes hosts like to do. They like to create controversy. And they said, well, what do you know about this? You're a GP. And that was a mistake, because if you've ever met Helen, you know that you shouldn't really confront her like that, because she turns around and says, yeah, I am a GP, which means that my job is to take care of my patients' health, both inside the clinic and beyond the clinic. And I can tell you that coal-fired power plant is killing my patients, and climate change is killing my patients. And I'm the president of the Royal College of General Practitioners, and it's not something that we're particularly interested in seeing continue. So first and foremost, there is a social licensing role that we have to play there. Health professionals as advocates, 8.4 million deaths as a result of the combustion of fossil fuels every year around the world. That is insane. That is unacceptable. The time for sort of kid gloves and friendly, scientific language is gone. When the president of the Royal College of General Practitioners says that coal plant is killing my patients, I think that gives us permission to be blunt.
Yeah, great. Thanks, Nick. So just to bring you up to speed, that was a paper that Nick was referring to that came out of Harvard a few weeks ago that found that many, more than 8 million deaths a year. That's nearly 1 in 5 deaths globally is due to burning fossil fuels. That's, as Nick said, an extraordinary figure. And they've actually looked, this is attributed it to burning fossil fuels, this proportion of air pollution. So that's extraordinary. I'll come on to Dan next, but firstly, if anyone has any questions on Twitter, you're very welcome to submit those. The hashtag is CODA, hashtag CODA0. So Ollie will be managing those questions. Please submit those. Dan, your thoughts?
I really like the 2 charts at the end, which showed the comparison between NextEra versus ExxonMobil, and you can see similar stories playing out in Australia. And if everyone knows who AGL Energy is, most of you probably use them to get your electricity and gas. AGL's share price is similar trend. It's down about 50% in 2 years. And when I first started doing this work and talking to particularly to investors, be they super funds or asset managers 5 years ago, the response was always, oh, we have a fiduciary duty to look after our members' returns, to provide them with the best returns. And 5 years later, that's the story, is that if they'd had got on that train really early, their members would have been far better off by investing in clean tech than sticking with, particularly coal and gas.
Great. Tim, I just want to pick up on something you've said previously in a talk, and that is that energy is the easy bit, and actually manufacturing is the next issue. And particularly that's relevant to the health sector, because we know that a significant proportion of the health sector's carbon footprint is about all the stuff that we buy and use. It's pharmaceuticals, it's medical devices, equipment, and so on. So how do you see that playing out in the health sector, in terms of us decarbonising?
Yeah, that's where the conversations really change. So for the last decade, we've talked about let's decarbonise the electricity sector. That is the easy bit. And then we'll work on the hard to abate heavy industry sectors and manufacturing and everything else. The urgency of the task means we have to deal with everything, but the brilliance is we've had a decade of technology development, which also means that we have a lot more solutions that are commercially viable today and eminently scalable globally. And so I think maybe the way Prime Minister Modi talks about it, and I don't know that he uses it in this context, but I'm certain he does, he means it this way. His mandate, what he's talked about for the last 6 years, and which is why I study India, he talks about electrifying everything. Now, he's doing it for energy security reasons. He's doing it for economic reasons. I don't care what his motive is. It's in the interest of India and the interest of the world. So electrify everything means you electrify all your transport, you electrify your railways, you electrify your trucks, your two-wheelers. And India could lead the world in that. They haven't done it as yet. They're talking it. But once you do that, you can massively decarbonise the energy system, the transportation system. At the same time, you've got to then deal with property. Buildings are a huge consumer. But the technology in green buildings has gone ahead. Australia is a world leader in green buildings. So you can actually have net zero buildings today, and they're not really more expensive. Sorry, they don't cost you any more, but you actually get better value because they're worth more, because investors want to invest in the industries of the future. So health and, I mean, think about your hospital. Every hospital in Australia should have solar on the rooftop. Every hospital in Australia should have electric vehicle charging infrastructure in your car park. You should have solar shade on all of your car parks if they're not underground. And so that way you can actually decarbonise a huge amount of your activity. Then you get your equipment and the manufacturing. Well, the equipment is generated through electricity. So you decarbonise the electricity, then manufacturing goes. But that's where we then go into heating. And so you could look to Sweden and look at the presence. I think they've totally phased out gas use in Sweden for heating. They've moved to district heating and they've moved to ground heat source pumps. The differential between the temperature underground and the temperature at the surface, you can use that. That creates energy and you can use that to heat buildings. And that's how Sweden heats their entire industry. That's how Europe's going, and that's what we should be doing for heavy industry in Australia as well. So when we talk to the governments, the forward-looking state governments in Australia, like every state government in Australia, then they're all talking about energy demand precincts, because the state governments are responsible for energy and they're actually acting on it, unlike our federal government.
And I was going to ask about gas. Is there any sort of role for gas? And also about batteries, because we're now seeing, similarly, I guess, to renewables, that the price of batteries is plummeting as well.
Yeah, Australia is the world's largest exporter of gas. Do you think Australia is going to be balanced and even and neutral about the position on gas? Not at all. Our government's bought and paid for by the fossil fuel industry. The gas industry in particular is our second largest export. So the federal government is absolutely enamoured with gas, which is why they've got the gas recovery. But put all the politics and money and donations and bribery that goes with that, and the fact that these fossil fuel giants pay no tax in Australia. That's my pet hate of them, apart from the fact they're destroying the world. So they're absolute leaners, not lifters. The gaslit recovery is a farce. I could probably be a bit more detailed, but I think you get the message. And the idea that gas is a cleaner burning fuel, it's cleaner burning. There's less particulates, there's less sulphur, there's less nitrous oxide. It is not less carbon emissions. Now, we're dealing with carbon, the ultimate health risk. And so on a carbon basis, on a whole supply chain basis, gas is not a transition fuel. It's a fossil fuel. It's got to go. And batteries are changing everything. So you take solar. Solar is changing the world, but solar plus batteries is solar on steroids. And so batteries are, we've seen 90% deflation in the pricing of batteries. We'll see another 50% in deflation in the next 5 years. And batteries mean that, I know Tony Abbott was absolutely worried about the fact that when it's not raining, when it's not sunny, we might not have power, a bit like we won't have water because it's not raining all the time. But it's just ludicrous. I mean, that's what a battery's for. That's what pumped hydro is for. That's what demand response meant. Now, let's let technology solve the problem. Let's not let a politician solve it. Sorry to swear about Tony Abbott.
I've got a few questions from Twitter, but one which I think only Tim could maybe answer is, how is the rise of cryptocurrency seen by financial markets from a renewable energy perspective, given the rumours about carbon costs of producing crypto?
My nephew wanted to invest in crypto about a month ago, so he got a 3-hour lecture about investing versus gambling. You want to gamble, but don't pretend it's investing. I don't care, is the answer. I'm interested in climate. I'm interested in how finance can solve the world's climate crisis, and the world's financial investors are now looking at the massive opportunity. So I'm going to rephrase the question. Let's look at what the biggest male billionaire in Australia is doing, Twiggy Forrest. He's just announced he's going to invest $235 billion. I'll say it again, $235 billion, $250 billion in renewable energy, because it's the right economic decision. It's the right moral decision, but he's motivated by money. He's a billionaire. He's interested in changing the world, making the world's biggest energy company. So he's not, unlike Elon Musk, he's not investing in crypto. He's investing in nation-building infrastructure to make Australia a world renewable energy superpower, and I'm all in with him.